Good on, and welcome to TBR's webinar, The Implications of ZTE $20 billion Credit Line. I'm Allison Crawford, and I'll be your host for today's session. Over the several quarters, our networking mobility practice has had a focus on creating timely and relevant thought leadership content to help our clients better understand the dynamics of play in the telecom market. This webinar is a part of these ongoing efforts, and we look forward to questions and comments throughout the presentation. Pass over to Chris. There are a few action items I'd like to cover with you. First, we're recording today's webinar and posting it on our YouTube site, TBR channel. We encourage you to visit the channel to watch this presentation or any of the others that we've posted. Second, we'd like to hear your opinions and thoughts on the materials we're presenting. Any questions or comments to the Q&A or chat function. Chris will ask them at the end of the presentation. Or if you'd like to set up an inquiry, you can reach out to Chris directly to set up that discussion. We're going to send out the slides to everyone registered for today's webcast within 24 hours of the conclusion of the webinar. You can also find these slides, as well as other thought leadership pieces, webinars, and commentaries on SlideShare at www.slideshare.net/TR_market_insight. And don't worry, I'm going to give you all the links to all our social media at the end of the presentation, so if you didn't write it down, we'll be providing those to you at the end. So with that, let me introduce Chris Antlitz, an analyst on the networking and mobility team here at TBR. Chris has been covering the telecom market for the last 5 years and guides all of our vendor research for NMP. He has a particular interest in the strategies of the market disruptive firms and is going to share his insight into what is happening with ZTE. So let me hand this over to Chris.
Thanks, Allison. Welcome, everyone. I'm going to jump right into this. ZTE. I like to think of ZTE as the smaller Huawei. Crossing rivals both in China, both do very similar business lines, getting into similar areas like enterprise, devices, etc. So we're going to start this presentation by talking about what happened. ZTE in the last decade has been one of the high-growth firms, just like Huawei. They were growing at a double-digit rate. Very good expansion in their services business, very good expansion in their devices business and their network infrastructure as well. Something happened in the first 9 months of 2012. If you look at this chart, you see the double-digit growth, year growth line, and then all of a sudden things started getting worse and worse and worse. 3Q12 was a really bad quarter for ZTE. Gross margins almost were halved. They had, I think, 17% gross margin last quarter, 3Q12. 4Q12, we're not expecting there to be much of an improvement. Their operating loss widened, lost over $400 million in 3Q12, and their sales were down year to year in all of their business lines except their services business. And their revenue was also down year to year in all of their major geographies. This was a complete about-face for the company, and we, because we're ZTE pretty extensively, we dug into what the heck happened, because they were doing pretty well, and then all of a sudden, in months, the firm is practically on life support, needing something to jumpstart them and get back on track where they had been going. So that's a backstory. So now we're going to move into what happened. So on the 4th, there was a press release that came out that the China Development Bank, which is controlled by the Chinese government, was going to extend a credit facility to ZTE in the amount of $20 billion US. Now, this money is a pretty good time because ZTE had just implemented a broad restructuring program, kind of similar to what Alcatel-Lucent and Nokia Siemens are doing, in the sense that they are putting a clamp down on internal spend. They're to reassess some of their lines of business and should they really be in those markets, assessing strategies that they had previously been doing to see if it's still valid, if they can still grow in a sustainable way, and they're testing those. So So another thing that they have done is their executives took a 50% pay cut. This shows the severity of the situation and how fast things deteriorated at this firm, how important this money is now to this company's future. Well, eventually this money is breathed new into the firm. And we're going to talk a little bit about what we think the implications are here, how this money, which, by the way, just for a reference, the amount of money that they have received is multiple times larger than their market cap of revenue. So there's a huge influx of capital into this firm to revive this firm. This is not, a few $1 billion that Alcatel-Lucent got, last month from Goldman Sachs in the amount of $2 billion. This is $20 billion. This is a tremendous amount of money, and this is the type of money that can really turn this company around and make them, a big competitive force again in this market. So with that, we'll ZTE's credit history here. So ZTE started dealing with the China Development Bank in 2005, where there was an $8 billion credit line established. And the intent was to spur international expansion because in 2005 and before that, most of ZTE's sales were based in China. But they, like Huawei, wanted to expand overseas in order to become a global multinational corporation and tap into new growth sources. So that's supplemented by 2 additional credit lines in 2009. Now, March and May of 2009, that was the height of the crisis. And as we all know, Western banks were pulling back on lending. It was a cash crunch. What the Development Bank and the Exim Bank stepped in also. They provided ZTE with $25 billion in credit lines to extend financing to customers to facilitate this infrastructure investment, to take the place of the Western firms that they traditionally relied on to provide this funding. We saw a shift in strategy where ZTE is becoming more dependent on providing and being backed by the Chinese financial institutions as opposed to more of the traditional sources of credit. So that enabled the firm to continue to post double-digit growth rates through the recession, emerged from that recession in a much stronger position, whereas their Western counterparts like Alcatel-Lucent and Nokia Siemens and Ericsson to a lesser extent were dealing with some of those issues that dealt with from that recession. So that brings us to December 2012, where they got this $20 billion credit line. Now, let me just be clear. The $8 billion to the $15 billion to the $20 billion, that's the same credit line. Okay, it's not 8 plus 10 plus 15 plus 20. It's going from 8 to 15 to 20. So the size of the funding that they're getting is increasing, but it's the same facility that they originally opened in 2005. Together, between China Development Bank and China Exim Bank, ZTE has access to over $30 billion US. And I might note that capital is at below market interest rates. So they're getting very favorable subsidized loans here that they can provide to their customer base to facilitate sales growth. That was very well for this company through the recession. If you look at their sales in 2005 and compare that with 5 years later, they're quadrupled. Okay, so there is a strong argument to be made that these loans, attractive financing that they're able to provide to these customers to take market share from incumbents is working. It has worked in the past, and that the way that they've approached the market, we believe that it will facilitate a similar from this new credit line, this enhancement of the existing credit line. Going. 2 things. First is to pay for this restructuring program that they've talked about. And the second thing, reinvigorating sales. So I'm going to talk about each of these separately. So first, the restructuring. So I call it stabilizing operations. First thing that we see them doing is refinancing their existing high-interest debt to interest burden and better manage their cash flows. If you look at ZTE's balance sheet, it's very weak. Here at TBR, we do quite an extensive financial statement benchmark, and we put up each company's balance sheet and income statement against competitors, and we calculate metrics and rank them. And time and again, ZTE ranks among the lowest in a relative basis between themselves and competitors. Very weak balance sheet. They have some debt on their outside of these two loans they have from China Exim and China Development Bank. So this will enable them to refi that debt at lower interest rate and have control over their cash flow and boost their net income, lower their interest expense. For the restructuring, reorganizing business units. Haven't been too clear on what that's going to look like yet, but they are reviewing what that might look like as they look at their new strategy now. Asset realignments, that's included in the reorg. Redundancy elimination. ZTE has grown very quickly over the decade, with the exception of this past year. Has, in some areas, too many of these. Need to do some rebalancing of their labor structure to better meet the new market realities here, namely, down in Europe, down in Asia-Pac, in spending by telecom operators. So they need to align with what the market opportunity is and steer sources towards the better opportunity. They're going to be better positioned than some of the more firms. So the other aspect here is reinvigorating sales, and we already highlighted a little bit of that with respect to facilitating customer purchases by extending these low interest rate loans. They do these loans primarily in emerging markets. We've seen most of these loans dispersed in the Middle East and Africa and Latin America. Volumes have been lent by the firm. We actually expect more to take place in Europe, given the credit crunch that they're still experiencing there. The economy is slow in Europe. So we expect that more of the developed countries to start seeking and tapping into this attractive loan program that ZTE has. The second invigorating sales is resource builds, new initiatives. One thing is their global network operation centers, where they vision their remote services, remote tech support, do their managed services. So those facilities, we see them investing more heavily in software and automation to make those facilities more efficient, and building more of the GNOCs, expand on that network so that they take on more managed services contracts. Managed services remains a key focus for the firm, and that's one of the few areas where they're still growing. Even in 2012, they grew managed services. So they are doing relatively well there. The area is R&D. So R&D money will help ZTE maintain their R&D investment. They invest a pretty percentage of their sales in R&D, a little bit higher as a percentage of sales than Huawei. ZTE really needs to maintain that higher level of R&D because of their smaller size, because of all the new markets they're entering, like enterprise networking. They're moving up the value chain in smartphones, areas like that. So that's requiring an additional investment in R&D. And now that they have this money, be able to backfill those programs and not cut back, because those areas remain core growth areas for the firm going forward to meet their targets. So with that, what do you mean? So we saw what happened to the firm. We saw what they're going to do with the money. What does that translate to market positioning? So we ran some internal models here at TBR, and we ranked the top 5 network equipment providers by sales. We growth rates, so actual growth rates in 2012, and we put in forecasts for 2013 and 14. Now, the reason we did this is ZTE, when they got this money, made a bold statement and said, we are going to be the 3rd largest network equipment provider in the world by 2015. We took that and we say, how does it look like to get them there? What is it going to take? What assumptions do we need to bake into this model that they're thinking to get to that number 3 market share position? So we've got the actual revenues and growth rates for 2012. We have the usual suspects: Huawei, Ericsson, Alcatel-Lucent, Nokia, Siemens, and then ZTE is number 5 right now. In 2013 and 2014, we suspect ZTE's growth rate will bounce back. We're looking at percent sales growth in each of those years. Huawei's growth rate moderating, but in a mid to high single-digit rate. We see Ericsson slowing a little bit. Ericsson's not going to slow too much because they are North America is going to fuel their sales this year and next year, LTE deployments. That brings us to Alcatel-Lucent and Nokia Siemens. Now, these 2 firms are undergoing major restructuring initiatives right now. They are relooking at their portfolio. They're trimming their portfolio. They're exiting non-core businesses, and they are attempting to get into higher margin, moving into the higher margin businesses to stay alive, quite frankly, to survive. So with those baked in, we forecast a sales decline for both Alcatel-Lucent and Nokia Siemens. With those assumptions in place, we do think that ZTE could make that top share by 2015. So that 2014 number is full year 2014. They eke out ahead of Alcatel-Lucent and Nokia Siemens. This is the scenario we ran. We do think that I'd circle this around our internal analyst team, and we do think that this is pretty real. But it's contingent on what are the CapEx budgets going to bounce back in Europe. How much business is ZTE able to win from this being exited by Alcatel-Lucent and Nokia Siemens? How much share consolidation is there going to be? Is there going to be any other M&A in the space? So the wild cards, but that they get there. So with, I think we will open it up for questions.
Great. Thanks, Chris. And thanks for those of you who have sent questions in already. I would like to encourage you now, if anyone has any questions about what Chris just presented, to send them through at this time. First question about is, on the previous slide, I'm not quite sure which slide they're talking about, those revenue figures include just network infrastructure or something else included?
So, Allison, can you go back to the previous slide? Yeah.
Yeah.
So these numbers include total company revenue, so and ZTE, also include their device businesses.
Okay. Question that came through, is a portion of funding going to flow into ZTE's enterprise and handset businesses, or is it going to be focused exclusively on the company's network infrastructure business?
So most of the money is going to flow into the network infrastructure business. That is their core business. It represents more than 3/4 of sales, or actually probably around 70% of sales. However, a portion will go into the enterprise, their enterprise business, which is still fledgling right now, and then their device business, which represents about 1/4 of sales. It's going to get a pretty good influx of capital. That's going to be well dispersed based on, how big is the business and what are its capital requirements and restructuring requirements.
We've had one more question come through. Is there anything you see that could derail ZTE's momentum on getting this loan? Are these stumbling blocks that could prevent the company from becoming the number 3 vendor? Said differently, what assumptions are you baking into your revenue forecast?
So I already highlighted a few of the assumptions. Basically, it's assuming a bounce back in CapEx budgets by the operator community. It's assuming there will be continued 4G deployments out of North America. It's also assuming that Nokia Siemens and Alcatel-Lucent's restructuring programs work as planned, whereby they exit the businesses that they want to, and they stem the sales declines in certain business areas that they are looking to turn around.
Okay, the next question that came through. Do you have any more insight into why their sales fell off a cliff?
Two reasons why. One thing is, well, let's go through a few things. So first and foremost, Chinese operators. They still represent a pretty large percentage of ZTE sales. Exact figure here, I'll throw that out there. So China represents about 45% of ZTE sales in 2012. The operators in China, they're waiting for speed so that they can deploy their 4G networks. They've also slowed dramatically their rollout of 2G to rural areas in China. Their 3G deployments have slowed as well. So that was the first hit that ZTE took. It was most pronounced in 3Q12, where the sales fell off China. The second thing that happened to ZTE is they had large contracts that got delayed, or they couldn't convert it in cash fast enough. So that money is going to get pushed to another quarter, or it could become a bad debt. So it's a wild card, but that exacerbated the 3Q12 decline. The other thing is, in the handset business, they're having to compete on price to carve out a market share in the lower end of the smartphone segment. And they're going with Huawei there and a few other handset players. That has been disastrous to margins and their sales. If you look at ASPs, they are stifled because of those what's going on in the devices space. So things that all kind of culminated together to create that exacerbated decline over those 9 months.
And there was a thought, are there any WTO issues with this loan?
So there's going to be formal issues that have been brought to bear. In the past, there has been talk by Western countries, by governments, have been saying, hey, this is uncompetitive. Money, and they're able to do this, equipment essentially at zero or low interest rates. Our guys can't compete, and that's not a level playing field. So there have been cases like that brought about in the past, but no real outcomes have come from those. And incumbents will also argue, well, they get loans too to facilitate infrastructure investment. The difference is that the amount of money that the Western companies have access to is much lower than Chinese companies have access to. All right, so ZTE, we're talking tens of billions of dollars in credit. The West firms, you're talking in the billions. Right, maybe up to $10 billion that they can get. If they to make financing that backstoppers will lend to them. So the magnitude is different. The other thing is the interest rates. If you look at relative interest rates, depend on the market and the credit quality of the operator and different things like that. But in general, these are very attractive packages that ZTE is coming to market with, and Huawei too, to some extent. They do a very similar strategy in the market. It's worked very well for them as well.
The next question that came through: what's the future in Europe for ZTE in wireless infrastructure?
So we expect that Z is going to, should we say it, they will get some LT contracts. However, we do not see them getting many with Tier 1 operators. Most of their infrastructure contracts are going to be with Tier 2 and Tier 3 operators in Europe. As Huawei and some of the bigger players will get them with the Tier 1 operators. Cover LTE, 3G, and some of the legacy technologies. ZTE come in at a lower price point. Technology is comparable. Quality is reasonable. The quality of their products has come a long way over the years. In some cases, it is comparable with some of the incumbent equipment. So there will be opportunities for them to take market share from incumbents, as well as drive new business in some of these new mobile technologies that are on the market.
We've had another question come through again. If anyone has any questions, please send them through now. $120 billion, not all will be used. Can Huawei get similar positive impacts on their limit?
Positive impacts on limit. So the company can do, ZTE very weak balance sheet. I encourage you folks to take a look at their balance sheet. It's weak. They're unformed in key categories like ROE. Look at their current ratio. If you look at their margin profiles, all of those things, this firm needs to be turned around. They need this restructuring to be successful. And having access to that loan, now they might not use all of it. They might not need to. But the significant portion of that money is going to need to be used in order for them to right this ship and to be successful in these new markets that they're entering, like enterprise networking, and bring up the device value chain into the more higher-end smartphones. So this capital is quite important to them to turn operations around and really start to become a leader, lead in more aspects in this market.
Okay, we just had a question come through. So you say you have a $30 billion fill facility in total. It is not utilized yet.
So there's very, let's see, difficult to understand. They have buckets that they put their loans into. Their long-term and short-term obligations, so it's too difficult to say how much they've already utilized. They do report how much their total debt load is, but they have other loans as well. You know, if they're operating in other countries or something, they might need a loan from local banks, or they might have other bank loans. It might not all be these low subsidy loans. They'd be normal market rate loans, that thing. So it's too difficult to say exactly how much they've drawn down so far. We do know that their debt load is quite big. Their interest expense has been going up gradually. So honestly, if they were to maximize the benefit from that loan, if they can refinance their higher interest obligations, especially their longer-term loans, they can only improve their credit rating, but they will lower their interest expense and boost their income statement numbers, their cash flow. So my guess would be that they're going to use almost all of that money in order to refi that debt, refi a high interest rate debt that they have, that they're carrying right now.
Okay, it looks like we have questions come through. So I want to thank you, Chris. Hold on. We have the person who just asked, what is your opinion? We might need a little more clarification on that. We've had a follow-on question. So what is your opinion? Can you send me a little more clarification? The next question that came through was, does she give similar credit lines for other local companies too, Why to grow or R&D?
Why to what?
Grow. So it's basically, is it why to grow the company or is it for research and development?
Oh, okay. So for the China Development Bank, their mandate is to facilitate international expansion. So the loans that they are doling is to multinational Chinese corporations. So Huawei has also been a big beneficiary of these loans. And there are some other Chinese firms. I think PetroChina probably gets some loans from them to facilitate their oil exploration activities. So just to give you some context around it, with respect to R&D, yes, there is a big move in China to invest in R&D and to invest in patent development, et cetera. In general, it is very ingrained in the Chinese culture. So, that is definitely an indirect benefit of doling out this money because some of it will go into R&D. It will support the spend that they're investing in R&D.
So we've gotten the follow-up. So do you really believe, this is the follow-up question for what's your opinion, do you really believe they will become N3 by 2014? Will profitability be improved in that scenario?
So profitability, I think they're going to have below average margins. I see them, I some margin improvement, but I don't see them becoming on par with industry averages. They're still going to be below average. They still need to price their equipment lower in order to take market share. That really hasn't changed. What has changed is they are able to support that strategy longer now because they have the financial wherewithal to take those, to accept those low margins and really investing in their key businesses. And then I follow on to that. What was the question again? Can you state that question?
Hold on. Do you really believe it will become N3 by 2014? Will profitability be improved in that scenario?
Okay. So I addressed the profitability one. Do I really think they're going to make it by 2015? Honestly, Nokia Siemens has made some very good progress on their restructuring. They actually could start growing sales this year. Alcatel-Lucent is still really struggling quite a bit. I don't see much improvement there. But Nokia Siemens is a wild card here. I do think they could move in the market share rankings. With that said, it's plausible that ZTE could be in the top three. The market share leader includes network infrastructure and handsets and enterprise. So I'm looking at total company sales. So if I look at total company sales, I rank those 5 companies. Honestly, I think ZTE could make it in 2015 or 2016. I think that the timeline's going to get stretched a little bit because Nokia Siemens is having such success in their turnaround. So I think that answers your question.
Okay, the next question through. ZTE has been competing primarily on price, thus their weak balance sheet. Any insight on potential strategies to increase their margins? Yes.
So there's a few things they're doing. In the device area, they are moving up the value chain. They're coming out with higher prices. So they typically put out the very low price point feature phones. There's been a big move there to scale up and transfer over to the smartphones. They've done very well doing that. However, their ASPs have not been as high as they would have liked. So they need to continue to focus on innovation, coming to devices that can compete against some of the devices coming to the market by Samsung and HTC. Do that, they can get some better margins on the devices. With respect to the network infrastructure, margins in China, they get very margins in China on their network infrastructure. China operators will begin CapEx investment to facilitate the LTE deployments late year and through 2014. catalyst that will support margin. In the services area, they are moving more and more towards a remote service delivery model, pushing more of their services from being provisioned in the field to being provisioned off-site so that they leverage the favorable labor rate. And then in automation in the GNOCs. So by having some functions, they're able to get more efficiency out of their services organization. And so those things combined are more of the major things that they're doing, but they'll all be accretive to their margins.
Okay. The next question, I realize we're running a little over time, but that's okay. The next question was, what is your opinion? Will ZTE focus like NSN did, or do they still wish to keep all their businesses like ALU?
It looks like, so the company said that they're going to reassess their business units. I suspect that we'll do nips and tucks instead of transformational changes. So what I mean by that is narrow their focus in some of the lower margin areas and steer resources toward more of the higher value, higher margin type service and infrastructure. That said, if you compare that with an Alcatel-Lucent and Nokia Siemens, they are exiting businesses altogether. Okay, less of more of an adjustment, a tweak for ZTE, rather than a overhaul of their business lines and their go-to-market strategy. So, so the answer to the question is yes, to an extent. It's not going to be as extensive as the restructuring programs implemented by Alcatel-Lucent and Nokia Siemens.
Looks like we don't have any further questions. If there are any more questions out there, please send them through now. If we don't address them on the live webinar, we will get back to you. I want to thank everyone for your time today, and thanks, Chris, for the presentation and to answer all these questions. I'd like to suggest that you follow Chris on Twitter as well as TBR. I've provided the handles for you here, and these are the social media links where you can connect with TBR through SlideShare, YouTube, and LinkedIn. I'm going to leave this function open for another couple minutes in case there's any more questions, as I mentioned. And I'd like to ask, before you stop, we are fielding a short three-question survey on the quality and the presentation as well as the presenter. And your feedback is going to help us improve our presentations from quarter to quarter. So it is very important to us that we hear your comments about how we're doing. We'll be in these thought leadership webinars every quarter, so please stay tuned for additional webinars coming up next quarter. If you have any questions or suggestions, please reach out to us, and we look forward to hearing from you guys all again next quarter. Have a good afternoon, everyone.